Welcome to InvestorHubX.com. Most traders learn to use volume at the bottom of their chart, a sequence of bars that grows taller on active days and shrinks on quiet ones. Useful, certainly. But it answers only a narrow question. When was the market busy? Volume profile answers something far more revealing. Where was the market busy? The distinction matters enormously. A stock can trade 50 million shares in a session. But if most of that activity occurred between $148 and $150, that price range suddenly becomes important. That zone carries weight in future sessions. Markets have memory, and volume profile helps us visualize that memory. Today we'll look at what volume profile is, how to apply volume profile on a chart, and the strategies traders use to identify important price levels and potential trading opportunities. If you enjoy this video, don't forget to like the video and subscribe to the channel. Your support helps us continue creating more high-quality educational content. Let's get started. Volume profile is a charting tool that distributes traded volume horizontally across price levels over a specified period. Rather than plotting volume on a time axis, it creating a profile that runs alongside the price chart, with bars extending sideways from each price level. The result is a visual map of market participation. Tall bars at a price level mean heavy trading occurred there. Thin bars mean the market passed through quickly, with little conviction. From this information, traders can identify important price levels that may act as support, resistance, areas of trend strength, or potential turning points. Now that we understand what volume profile is, let's learn how to read it. Although the chart may look complicated at first, there are really only a few important components you need to understand. The first one is the point of control, POC. The point of control is the price level where the highest amount of trading volume occurred during the selected period. Think of it as the market's favorite price, the place where buyers and sellers were most interested. You'll usually see it represented as the longest bar in the volume profile. Because so much activity happened there, price often reacts around this area. Price may bounce from it, consolidate around it, or repeatedly revisit it. This is why traders often treat the POC as an important support or resistance level. Next is value area. The value area represents approximately 70% of all traded volume. Value area high, VAH, marks the upper boundary of that range. Value area low, VAL, marks the lower boundary of that range. You can think of the value area as the region where the market considered price to be relatively fair. Price spent most of its time here. Finally, we have LVN, which stands for low volume node. These are areas where very little trading occurred. On the volume profile, they appear as thin sections or valleys between larger bars. Because few trades happened there, the market didn't spend much time there. Instead of slowing down and consolidating, price can accelerate through these areas. That's why traders sometimes use LVNs to identify fast movement zones, breakout areas, or potential turning points. So how do we plot volume profile on a chart? First, head over to the forecasting and measurement tools, then select Anchored Volume Profile. After that, click on the point where you want the profile to begin. Once applied, you'll notice a series of horizontal bars appearing alongside the chart. These bars show you how much trading activity occurred at each specific price level. The larger the bar, the more volume was traded at that price. The smaller the bar, the less trading activity occurred. You'll also notice this red line here. This is called the point of control, or POC. The point of control represents the price level where the highest amount of trading volume occurred during the selected period. You can think of it as the market's favorite price level. The green shaded area represents the period used to calculate the volume profile, from the starting point all the way to the present price. Now, let's look at some volume profile strategies. The first strategy is understanding market structure. Volume profile becomes much more powerful when you stop looking at it as just an indicator and start reading it like a story. It shows where buyers and sellers were most active, who was in control, and where momentum started to change. There are three main volume profile shapes: the D-shaped profile, the P-shaped profile, and the B-shaped profile. Each shape gives us clues about what the market may do next. Let's take a look at them one by one. A D-shaped profile shows a balanced market where buyers and sellers are in agreement. Price usually moves sideways and may eventually lead to a breakout. A P-shaped profile is a bullish structure where more volume builds at higher prices. This suggests buyers are gaining control and pushing price upward. A B-shaped profile is a bearish structure where more volume builds at lower prices. This suggests sellers are in control and price has accepted lower levels. The second strategy is combining volume profile with support and resistance levels. Here we have NVIDIA on the daily time frame. Let's say this is our trade setup. We apply an anchored volume profile starting from this point, which means the volume data will only be calculated from this selected area onward. You might be wondering, why do we place anchored volume profile at a specific location? The reason we apply the anchored volume profile here is because this is a major resistance. The red line here is the point of control, where this price level where the highest amount of trading volume occurred. This tells us there was strong market interest around this area. Now, if we look closely, this area also aligns with several previous reversal points. That means we not only have a point of control, but also a key support and resistance level. Because multiple factors are lining up in the same area, this creates a higher trade quality setup. When price breaks above the point of control, this is our entry for a potential long trading opportunity. If you find this helpful, please visit InvestorHubX.com for more lessons just like this. We are building a complete learning platform designed to help investors like you master technical analysis, stocks, cryptocurrency, commodities, precious metals, property investing, and more, step by step. You will also get access to custom indicators and in-depth video courses to support your learning journey and take your skills to the next level. To summarize, volume profile helps traders understand where most trading activity happened on a chart. In this video, we learned how to identify important areas such as point of control, which is the price level with the highest trading volume, value area high, which is the upper boundary of the main trading zone, value area low, which is the lower boundary of the main trading zone, low volume nodes, which are areas where price can move quickly. We also looked at the three main profile shapes: D-shape, which indicates a balanced market, P-shape, which indicates a bullish market, B-shape, which indicates a bearish market. Finally, we learned how traders can combine volume profile with support and resistance levels to identify better trading opportunities. If you found this lesson helpful, please give the video a thumbs up, subscribe to the channel, and turn on notifications for future lessons. I'll see you in the next video.